Many of you are remitting foreign currency to any of your close relatives or maybe your children for educational purposes or other purposes, or you are paying someone for medical expenditures outside India or for any other purposes. In such a situation, you must know what is the rule that is existing for the deduction of tax at source or collection of tax at source. Let me today discuss in details about the provisions of the Income Tax Act relating to the collection of tax at source or tax deduction at source in respect of remittances to countries outside India or foreign currency. Now, the first thing that you must know is that the Reserve Bank of India has a liberalized remittance scheme under which up to 250,000 US dollars you can remit to any person outside India. But there will be certain applications of law like the TCS, that is the tax collection at source, or the TDS, that is the tax deduction at source. Now, there is a difference between the tax collection at source and the tax deduction at source. Tax deduction, just to give you an idea, is applicable when the amount that is transferred is chargeable to income tax and the concerned person has actually paid the tax and is remitting the money outside. In such a situation, tax deduction at source will be applicable. There are certain sections which are applicable, the most important section being section 195, which talks about TDS on foreign remittances to persons residing outside India, where tax has actually been deducted on the basis of the rates that is prevalent under the Income Tax Act. A mention must be made as to the direct tax avoidance agreements, which is the DTAA in short, which exists between the foreign country where the remittance is being made and India. If there is a DTAA in existence, then the rates prescribed for the TDS there will become applicable. Further, if it is taxed in India, then the same payment will not get taxed in the foreign currency where it is getting remittance. So this is so far as the TDS is concerned. But TCS is another very important thing which you must keep in mind. That is tax collection at source, where section 206C 1G of the Income Tax Act is applicable. There are two types of people who are required to make this TCS. One is the authorized dealer, like the bank, through whom you are making this remittance. They are required to collect tax at source under certain conditions. And the second is the foreign tour operators, who are also required to do TCS before any payment is received by them in respect of foreign tours. Now here there is a threshold limit for TCS, that is 10 lakhs of rupees. So if you are making a remittance which is lower than 10 lakhs of rupees annually, that is the total small amounts added together for the whole year, if it does not exceed 10 lakhs, then no TCS will be done. However, if you are making a remittance which is higher than 10 lakhs, then the purpose is very important. If the purpose of it is education or medical, then the TCS amount is 5%. If it is for any other purposes, then it is as high as 20%. This is the amount that your bank will be charging or your foreign tour operator will be charging if this amount is exceeded as per the provisions of section 206(1)(g) of the Income Tax Act. I hope this information is useful to you.